Ladies and gentlemen of the crypto space, we're live on a Thursday at 11:39 a.m., June 3rd. Bitcoin conference down in Miami is in full effect. Dollar bullishness is going crazy today, hitting the 200 and the 200 EMA, 200 SMA in the 4 hour. That's what's putting downward pressure on the broad equities markets as well as the crypto space. Most of the charts look very strong or reasonable. They're clearly not depreciating. Do we have the potential for these trends that we've been following the last couple of days to break to the downside? Of course. And there's plenty of folks that are speculating to the downside, to the upside. We have our PA, we have our FA, and we're thinking about predominantly to the upside from a story perspective. It's only obvious for capital to continue to inflow into the centralized financial system. But the short term, you have depreciative cycles. And that's what I like to think about. I like to think about conviction, time horizon, yield, balance sheet, managing your capital in the form of a balance sheet. And if it goes through a depreciative cycle and goes up in the next 2, 3, 4 years, you make capital all the way down and all the way up. And operating as a balance sheet, the only difference is during a depreciative cycle, you're able to borrow less capital. Therefore, your revenue stream is impacted. But then the bullishness resumes. Principal appreciation goes up. You're able to borrow more capital. You have more working capital. You have more total capital on the balance sheet. You're able to generate an increased revenue stream. Operating this thing as a business, you're able to clearly see a path to traverse depreciative and appreciative cycles no different. It's fascinating what a different perspective does with regard to capital management. Dollar bullishness, macro effects, and time horizon. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Got Derek's in the house, Igor's in the house. What's up? Michael, good afternoon. Long live the Curve War. Curve is one of the most incredible monetary policies. And worth mentioning that I have, over the last 2 days, scrounged up everything that I could find in loose capital, small. I barely have any tiny positions left. I am very concentrated in large macro cap assets, albeit Curve is probably a mid cap in most regards. It's not even in the top 100 at this point. But it is a deflationary protocol, which is so fascinating because it has a hyperinflationary emission schedule, decaying hyperinflation. But it's net deflationary because there is more assets that are removed from circulation that are released into circulation from the incentivized emissions program or the incentivized engagement programs that they offer. Just if central banks had any insight that that's straight up or want any insight, that's an MMT policy right there. So, and no one's ever done anything like it before. It's a completely novel monetary policy that really has no precedence in history. Uh, Clearly, there's examples in history of hyperinflationary currencies that have completely destroyed themselves, but the amount of deflation in the current protocol or the current monetary policy is incredible. Coupling hyperinflation with hyperdeflation, incredible. RMS is in the house. Dean, thank you. Gia June, Zach, James, good morning, Noah. How do you feel about borrowing Curve a 3.4% variable rate to go and pool? I didn't want to directly purchase Curve. I want to expose to the high yield. Well, if you borrow Curve at 3.4% and lock it in CVX CRV, you won't be able to get the Curve back. So there's a bit of at times there's a lot of slippage in the sushi pool to swap CVX CRV for Curve. I wouldn't do that. So clearly that makes logical sense. What you present, that is doable. That's just something I would not do personally. So right now, the vast majority of my curve is in VE curve. Probably about 40% of all curve I have is in CVX CRV, that is staking. The yield on it is extraordinary. Absolutely incredible what Convex is doing, because you have your curve exposure, and if you're talking about a 2, 3, 4 year time horizon, that's where curve really starts to shine, especially after August when their emissions are reduced. They go through their halving period or whatever the reduction schedule is. This it's a decaying emissions schedule, and I bought the bought the dip. I literally have nothing small left. Everything's gone. Every small asset that I had 1% here and there, it's all been trimmed and all consolidated. I'll give you some numbers if I could find. Here it is. Vast majority of capital is currently deployed to Matic. I get tempted at times to pull that down a little bit. I have reallocated a little bit of capital over to Ethereum. I barely have any exposure to Bitcoin. Just I see everything outperforming it. Curve is my third largest capital allocation, and then it just goes down from there. But there's barely any small allocations left. The Ren VMs, Cosmos, Bancor, Polkadot, and then after Polkadot is Bitcoin. With I literally have like a half of Bitcoin. Small position in synthetics that's just lingering from back in the day, and it just grows and compounds to still have like a smidgen, like 25 Aave that's in the security module. That's about it. That's worth mentioning. Everything else is relatively trivial in the grand scheme of things. Um, Still have my master nodes from 2017, 2018. I've held for years. I've held those things for years, and what's the Syscoin Mastodon is pretty good. 23 grand for a Syscoin Mastodon. I think I bought that thing for like $7,000. Um, Pretty good. Pretty good. Let's go back to the stream. Um, Ehrman's in the house. Rupert, always a pleasure. Curve token is coming to Polygon. Yeah, that's exciting because I wonder how they're going to play the E curve cross chain, cross network, because I have a large VE curve position. So if I'm able to get that boost on Polygon, that's massive. And that's where right now I borrow capital from Aave and borrow a Matic from Aave and just redeposit it. And I have like a 3.0 health factor right now. Um, Risk adverse. But if I'm getting boost on curve and I'm getting emissions in curve, yeah, I'm going to be borrowing cash because I want curve. That's awesome. Vortex, when interview with Tiki. I believe that's going to go up tomorrow, which is pretty cool. That was a great conversation. Uh, uh, Very few people interview me, and I very much, you guys see with the stream, I like to talk. So he brought out some great questions and great topics of conversation. That was a very fun conversation we had. Um, An Arco, pump it. RMS, I like you. Relax caps are meaningful. Yeah, these Tommy Bahama hats, I love these things. Giajun Matic is included in the Bitwise ETF, by the way. All right, so the stars seem to be aligned for it. And then just because the stars are aligning doesn't mean we can't have a depreciative cycle. In the meantime, it's my largest exposure. Sometimes I feel a little bit uncomfortable, but other times I feel confident in my conviction and my time horizon. Um, it did break down against Bitcoin. This was a massive flag, broke down. Could be a fake out breakout type situation. Ethereum is holding in this ascending triangle, a little bit of a symmetrical component at the end. US dollar, uh, I mean, it's just going horizontal. It's literally just like a horizontal consolidation. Ethereum broke out this morning, fell back down, is kind of riding resistance. Bitcoin broke out, is currently above resistance, which is pretty cool. The dollar exploded and has now breached 200 EMA, 200 SMA. So this is going to put depreciative pressure on the broad asset space, which is everything from securities to the crypto assets, which I would argue are more equities than securities, or they have more properties of equity, or at least have equity. You can't access the equity in a security, so I don't know. These boys in legacy finance got their semantics all messed up. Um, Matic and Jackson, where do you get your 50% real inflation? So 8 to 12%, according to the Chapwood Index for like 2019. and then 2020, and then 2021. It's literally just an extrapolation. They debased the monetary supply by 25% in 2020. So whatever, 8 to 12%, slap on a couple of percent, let's say about 15%. Raoul Pal has also said about 15%, give or take. So basically, dollars in a bank account is minus 15% interest per year. The opportunity cost of keeping capital in a bank account is paramount. It's basically not even just a slow bleed. That is a full-on jugular drain. Um, I have a lot of fear and anxiety keeping dollars in a bank account. And the fact that I'm forced to keep it there to pay bills is extraordinarily frustrating. So the second the Gemini credit card comes online, or I'm very tempted to move capital over and handle everything just from a crypto perspective. Because if I could earn double-digit gains on dollars, it is just, it's not just an opportunity cost keeping dollars in a bank account. Um, it's a financial tragedy. George is in the house. What's up? June, Tiki, led me to here. Thanks, both of you. Yeah, he's got a good mind on his shoulders, and we have good conversations. I quite enjoyed that. I like the way he thinks. I like the way he talks, and I think our ideas, mine as well as his, go back and forth. Um, and that's a good thing. We want synergy. We want to learn from each other. And that's exactly what we do in our Discord forum. Everyone has great ideas, and we've made good choices together. And we're taking less risk because we're always encouraging each other to take less risk, given the incredibly lucrative returns possible with relatively risk considerate positions. Um, Stick to the majors: Aave, Curve, Bancor. And I think Convex kind of came on the scene really quick, but I think they have clearly they have the Curve blessing, and they have a strong user interface. So it comes across very solid, and what they presented is very rare for a brand new project. So I have a feeling that they have persons contributing to that protocol that have substantial experience, because that's not no baby kitty type DeFi protocol. That's no MVP. That's not a George in his garage type protocol. That's what whoever has built Convex has a lot of experience that looks and feels and is behaving like a professionally built project. And that's quite reassuring. Deployed a fair amount of capital there. I happen to think the CDX asset has been appreciating significantly. I don't have any CDX exposure. What I wanted is the curve exposure that have emissions to the tune of 130 to 140%. You still have your curve assets because you could swap CVX CRV for curve. Take some slippage hit, but the point being there is liquidity, and this all just started like 2 3 weeks ago when Convex launched. So about 40% of my curve exposure is through CVX CRV, and 60% is directly on VECRV, and that's the name of the game. So the charts look good. Bitcoin hovering around resistance flip support at this point. I mean, this thing prints a higher high. That's going to be really nice to see, especially in the face of dollar breaking out 200 EMA, SMA in the 4 hour. Let's go to the daily. I mean, there's a massive amount of resistance above head, and we're about to hit the top Bollinger Band. And top Bollinger Band is below the daily guppies, and the top of the loft is a bearish cross of the 50 SMA and the 100 SMA. So overall, this is going to take a huge amount of bullishness to push through this type of resistance. It's a massive amount of resistance, and the way I would look at this is a falling wedge that we were following for all that time since early last year. And if this hits resistance and falls back down, 88, 87, you're talking about classic fake down breakdown pattern. The antithesis is the fake out breakout pattern where it dips below support and pops back up. This is more breaks out and falls back down. It's the fake down breakdown pattern. And obviously everything in legacy finance takes a billion years to do anything. So you have no idea. You'll check back in a month and you'll see what it looks like. It's just everything moves so slow in legacy finance. It's just impossible to interact with, engage with, capitalize on. I can't do real estate. It's so slow. It takes like 3 months to sell a property in New York. Who the hell would want to do that when I can provide liquidity to Ave and borrow up to 30% capital in 2 seconds? 2 seconds. And these people in the real estate game are waiting months for closings and lawyers and back office loan operators and whatever the back office folks that sign off on it. It's just the most ridiculous process. I don't know who has the patience for that. And the fact that even if you have the patience for it, it's just opportunity costs because it just takes forever and time, wasted time is opportunity cost. So yeah, so DeFi Goat got to be the curve team behind Convex. So that is a tantalizing thought that would make a lot of sense. Um, it's just behaving like a solid platform. Like everything was so thoroughly tested, it's quite functional. You know, that's clearly separate and apart, mutually exclusive from the smart contracts themselves. But with all these years of experience from the Yearn V1, V2 vaults, and I don't know. It's not too hard. We're not talking about like especially when you're talking about like just urine V1, V2 vaults on curve. You're not talking about multiple strategies. That's a single strategy, so it has the least degree of sophistication for a crypto derivative. So I don't. I have a high level of comfort, and whether that comfort is justified or not, only time will tell. Whether my value allocation proves to be naive or not, only time will tell. But this is one of the rare occasions that I have deployed capital and feel relatively comfortable dealing with a relatively new protocol. Anyway, I got a business meeting at 12 o'clock, so I probably should cut this short. 41 people in the stream, 13 likes. One, we can do better too. It's what the market's hot. We why folks so salty about the crypto space? Uh, this is the time, in my opinion, when the market is red hot is when you're trimming cash. When the market is like this is when I'm deploying capital. It goes down, it'll come back up. But this isn't the time to have fear. This is the time of opportunity. You look at the fear and greed meter. That thing is in max fear. I don't know why. Max fear for me is when it's all the way at the top. When's it going to crash? When's it going to crash? I had a huge amount of cash the Tuesday before the Wednesday crash because I feared the market. This is not a market that I fear right now. This is a market filled with opportunity, in my opinion. Small Alpha League. Curve is planning to expand their business beyond stable pairs. That's beyond an Alpha League. That is Curve, baby. We've known about it for a long time. Uni V3 came out. Curve has the engineering and intellectual capacity, I'm sure, to do many things. And the only thing I can think about is how, aside from some DAO proposals, some votes, and some minor platform iteration, I have no doubt that those boys are thinking of what's next for Curve. And that's what gets me most excited about the Curve asset. What's the evolution of the Curve platform, just as you are stating, speculating, and are likely to be correct, G. June. Heirloom, liking the wisdom. You're welcome. This wisdom will keep coming at you as long as I have time. Curve pulls appear in 1 inch now. Yeah. What I would love if I could take Sushi or Curve LP assets and place them on Aave and borrow capital against them. That'd be just ridiculous. Powder Monkey, you're very welcome. Derek, always a pleasure. All right, 11:58 a.m. on a Thursday, June 3rd. As always, thank you everyone for joining. Stop by the Discord. Great group of people all day long. I'm in there basically all day long. 41 people in the stream, 18 likes. We can do better. As always, tell everyone to subscribe, and I will see you tomorrow. Peace.